So, we've been seeing the Nasdaq kind of take a dip lately.
Yeah.
It's down about 13% from its highest point.
Oh, wow.
Which puts it, officially in what they call correction territory.
Yeah.
And when you look at, the reasons the sources point to, the same old stuff really worries about a possible recession and, this whole tariff situation.
Yeah, those are always those big question marks hanging over everything.
Always, yeah.
Yeah.
But, for us, those of us who are in it for the long haul, these dips can actually be kind of interesting.
Yeah.
I mean, they can be a chance to maybe find some really good companies at prices that are looking pretty tempting.
For sure.
Maybe even what the source calls fantastic bargains.
Yeah, absolutely. It's a time when all the noise in the market,
Right.
can sometimes make you miss how strong some businesses really are.
Yeah.
And for you, the listener, it's all about seeing through that noise and find those opportunities where the long-term potential is still there.
Yeah.
But the price to get in has changed,
Yeah, and that's exactly what we're going to try to do today in this deep dive.
Yeah.
We're zeroing in on two specific companies that our sources pointed out as potentially good buys right now in this correction.
Okay.
Advanced Micro Devices,
Yeah.
or AMD, right?
Yeah.
And PayPal.
Interesting.
So we dug into the details, and we're here to break it down for you.
Great.
So you can see why these two might be worth a closer look as you think about, what to do with your investments.
Makes sense.
So with that big market picture in mind, let's switch gears and talk about the first company our source flagged as a potential opportunity in this environment.
Okay.
AMD. Advanced Micro Devices.
Right.
Now, AMD is a major player in the data center GPU space, which the source mentions is mostly dominated by NVIDIA.
Yeah.
It'd be easy to look at that and just think, oh, AMD's always trying to catch up.
Yeah. That's what a lot of people think.
Right.
But the source makes a really key point here. To just focus on that one rivalry would be a big mistake for you as an investor.
Yeah.
While NVIDIA is definitely the leader in that really high-end AI-focused data center GPU market,
Right.
AMD has built a really strong and, importantly, a winning business across a much wider range of things.
Okay, let's unpack that a little, because when you hear GPUs these days, the AI conversation and NVIDIA kind of take over the headlines.
Right.
But the piece really emphasizes that AMD isn't just fighting that one battle.
Yeah.
For you to grasp their full potential, we need to look beyond just that one head-to-head.
Exactly. AMD's reach goes way beyond just those top-tier data center GPUs.
Yeah.
And it's really important for you to know that they're also a major force in the desktop and laptop processor market. Actually, they've been steadily taking market share from Intel there for a while now.
Interesting.
And you've got their gaming chips, like the graphics inside your gaming console, for example. That's another big market for them.
Right.
And maybe less obvious, they have a really successful embedded applications business.
Okay.
This powers a whole bunch of different technologies, including parts in self-driving cars.
Wow.
So as you can see, their business isn't just about taking on NVIDIA in one specific area.
Right. It shows a much bigger picture of what they're doing and where they stand in the market than just that one dominant story.
Right.
And when you look at their recent performance, the numbers really back up this idea of a strong and growing business.
Yeah.
The source highlights that their data center business almost doubled its revenue year over year in 2024.
Wow, that's impressive.
That kind of growth in such a crucial area is definitely something to pay attention to.
Absolutely. And it's not just data centers that are doing well.
Oh, okay.
Their PC chip business also grew really fast in that same period. And if you look at the bottom line, their adjusted earnings per share grew by a solid 25% in 2024.
Okay.
Plus, they're predicting a big 30% year-over-year revenue growth for the first quarter of 2025. That kind of projected growth rate tells me they've still got a lot of momentum.
It really does show they're operating from a position of strength.
Yeah.
And the article points out that over the past decade, AMD has made some really smart moves in developing its product portfolio.
Yeah?
This long-term effort is really setting them up to benefit from the current AI boom.
Right.
It wasn't just luck, it's been a deliberate buildup over many years.
Exactly. It wasn't something that happened overnight.
Right.
It's the result of constantly investing in research and development and having a clear strategic vision. And when you look ahead, the potential growth opportunities for AMD seem huge.
Okay.
The source mentions that the data center industry as a whole is expected to grow by a massive 140% by 2030.
Wow.
And the autonomous vehicle market projections say it will grow even faster.
Oh, that's huge.
These aren't small markets. We're
No.
talking about massive, expanding sectors where AMD has a really strong presence.
So with that kind of future growth potential on the horizon, the current valuation of AMD stock starts to look pretty interesting.
Yeah.
The piece says it's trading at around 21 times its forward earnings.
Okay.
And just to clarify for you, forward earnings is an estimate of their earnings in the coming year.
Right.
Now, on its own, a multiple of 21 might seem high to some.
True. But you absolutely have to consider that valuation in the context of the fast growth we've been talking about. A company that's expected to grow its revenue by 30% year over year often has a higher multiple.
Right.
The source actually presents this as a potentially great opportunity for long-term investors like you, especially when you factor in those growth prospects.
Okay, so that gives us a good overview of what's going on with AMD.
Yeah.
Now let's shift gears and take a deep dive into our second company, PayPal.
Okay, PayPal.
The source tells us that their stock price took a pretty big hit recently after an earnings report that, to be honest, didn't really impress investors who were hoping for faster growth.
Right.
As a result, the company's valuation has dropped quite a bit. Yeah, the article talks about what it calls a...
The article points to a few key areas where they see potential.
Okay.
One is the launch of their much-anticipated advertising platform, which happened back in mid-October. The source notes that the impact of this new platform isn't really reflected in their latest financial results yet.
Yeah.
So it represents a potential future driver for growth that you might want to keep in mind.
That makes sense. It usually takes time for new things, like an advertising platform, to gain traction and start really contributing to the bottom line.
Yeah, for sure.
So beyond that, what other levers are they looking at to reignite that growth?
Well, the current leadership sees big opportunities to generate a lot more revenue by better monetizing their Venmo platform.
Right.
Which, as you probably know, has a huge and very active user base.
Yeah, definitely.
They also believe there's still a lot of room for growth in their core online payments processing business. And with over 400 million active users across their whole ecosystem. The ability to cross-sell different products and services, like offering more integrated financial solutions, is a really big opportunity for future growth.
Right.
It's almost like they have a built-in market ready to go.
That's a huge advantage.
Yeah, it's like having a massive potential market already in your pocket.
And even with this renewed focus on growth, the article also highlights that PayPal is in a very strong financial position right now.
Oh, absolutely.
They're bringing in about $6 billion in free cash flow every year.
Wow, that's a lot.
And just so you know, free cash flow is the cash a company has left over after covering its operating expenses and capital expenditures.
Right.
That $6 billion is a serious amount of money.
Yeah.
And what's especially interesting for you as a potential investor is how they're choosing to use that cash.
Okay.
According to the source, a big chunk of it is going towards buying back their own shares.
Interesting.
This is a strategic move to capitalize on what they see as their currently undervalued stock price.
Makes sense.
And it can also boost the value of the remaining shares. So it seems like both AMD and PayPal are making pretty compelling cases for investment right now.
Yeah.
Though for different reasons. AMD seems to be riding big growth trends in key tech areas.
Right.
While PayPal is more in a turnaround situation.
Yeah.
With a strong underlying business, but a really attractive valuation.
I see.
That's a good way to sum up the current situation for both companies.
Yeah, I think so.
However, and this is really important for you to remember, as the source itself points out, we're still in a pretty volatile market.
Right.
There's no guarantee that things will calm down anytime soon.
Yeah, that's true.
If the economy does go into a recession, or if things get worse overall, it's definitely possible that the stock prices of both AMD and PayPal, along with the rest of the market, could drop even more in the short term.
Yeah, that's always a risk.
That's a really key point to keep in mind.
Yeah.
No investment is risk-free.
Nope.
And trying to time the market perfectly is almost impossible. So as you think about all this information, here's a final thought for you to really consider.
Okay.
Given everything we've discussed, AMD's high growth potential in these expanding markets versus PayPal's current low valuation and its efforts to reignite growth in what could be a weakening economy.
Right.
What are the different ways a long-term investor like you might weigh those potential risks and rewards? How would you personally approach evaluating and maybe investing in these kinds of opportunities in this kind of shifting market landscape?
Yeah, that's a great question.
It's definitely something important for you to think about as you navigate the current investment world.
For sure.
All right, well, that's all the time we have for this deep dive.
Thanks for having me. It's a great discussion.
Thanks for joining us.
Of course.
See you next time.
Sounds good.